Hello everyone and welcome to Day Trader S&P 500. Today is May 23rd, Sunday. It's time for our weekly update. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked market newsletters. You can see our honor rolls and top 10 awards over the years there and our disclaimer below there. Okay, I want to thank you guys for joining our channel. I want to let you know we offer a monthly and an annual subscription. Annual subscription is monthly reports plus interim reports. We just put one out earlier this morning. And our monthly subscription is daily reports, so we do that at least once a trading day, sometimes more often. And while I'm thinking of it, we put one out last Thursday. You can see here is an example of our short-term report, and we identified that move up as a wave to a zigzag right here. We'll get into more detail when we look at the charts when we do a top-down approach on the S&P. But we put this out to our monthly subscribers on Thursday, and then we had a Friday morning report too, like less than an hour into the trading day. But here is that ABC zigzag 535. That's the count we're on right now. We have our make or break points for that. But before I forget, I want to thank you guys for subscribing. And don't forget to hit that reminder bell and the like button, which didn't show up. But there is a like button down there, the little thumbs up. Appreciate you guys supporting the channel. Let me silence that thing. I think it's gone. Okay. Today we're going to cover a lot of things. It's an important week, a lot of important make or break points and extensions and third waves and all that. We're going to cover the S&P. We're going to cover the NASDAQ, Tesla. We haven't visited gold in a while. We'll do that, and we'll look at Amazon as well. Let's start with the bigger picture with the daily chart from the March 2020 lows on the S&P. We've got 5 ways up. There's a couple different ways you can count it, but let's do this at first. We're going to see what are we looking at if the market retraces this 5-wave advance from the March 2020 lows to the most recent highs. And it's a little hard to see here, but what we started doing back in the beginning of May when the market topped, it's hard to see from here. Look at the most recent 5-wave advance. We can look at that on a shorter term chart. You'll see it. And then once the market retraced more than 100%, then we knew it was tracing more than just that 5 waves. So we got to go to one higher degree, which is from the March 4 low, and that's 5 waves up. That's a little bit easier to see here. I'll mark it for you guys. And that's not the right one. Let's go over here and get this 5 waves up. And we've got a 3 there, a 4 there, and a 5 there. It's way too high of a degree. Let's make it sub-micro, make it better. There we go. So we got 5 waves up there, and then we're going to retrace that at a minimum, and this more than likely from the March 20 low, and possibly more. But first things first, we got to get a handle on this here. So we're going to look at things from that March 4th, 2021 low. Here it is here. We're looking at a 2-hour chart now. You can see that a little better. 1, 2, 3, 4, 5. And you can see this thing just broke down. It looks like it put in an ending diagonal triangle here. And then here's our wave count here. I want to show you guys what our Fibonacci retracement is, because this could be just retracing this most recent 5 waves. And until it proves otherwise, we'll see. Okay, but here is 382, and it fell short at 40.42. The 500 is 39.81, and the 618 is 39.20. Once it wipes out the entire 100% of the rise from the March 4 low, which is 37.23, we'll know it's more, and then more likely a retracement of this. But let's get back to here while we can. Okay, so it wiped out that 5 waves there, and here we've got the 1 down, and here is that zigzag 5 up, 3 down, 5 up for wave 2. We got a double top here. We also have a double bottom here, so there's a couple things in play. All right, but let's see if we can look at things a little closer from that May 7th high. This is a 2-hour chart from that March 4 low. I think I have that here. Yeah, here is that May 7th high. Here's the one down, and then the A, B, C up. And we've got a 5, 3, 5. Okay, so let's look at this and see where this should go if wave 3 of 3 down is upon us, which it appears it is, and we'll get into that a little tighter in a little bit here. Okay, 3, I'm going to move these over. It came over from Friday. I haven't updated that. Okay, let's get over here. 3 equals 1 at 40.09, and it equals a 1.618 at 38.98. Those may not be exact. I believe I have a picture of that. But you can see that was 5 waves up, 3 waves down, and 5 waves up. You can see I'm counting this down here. So let's get a little closer with this from the May 21 high, the wave 2 high, if you will. I think I have that in there. And there is the May 21 high. And you can see we've got 5 down and a wave up, correction, and then 5 more down, and then another ABC. This is a fractal of that. Here's 5 down, 3 up, 5 down, and then an ABC, which looks very similar to this ABC. It's a fractal within a fractal, if you guys can see that, okay? So where do we know we're wrong? All right, we're looking at wave 3 of 3 down. Okay, you can see this is 1, follow the parentheses, 2 up, 3 down here, and then we've got an ABC for 4, okay? 4 cannot go higher than the low of 1, which is down here at 41.70. I've got it marked. So it came right up to it, bounced off, came right up to it, bounced off. If you guys can see here, this looks like another 5 waves down. 1, 2, let me mark that for you guys, which is a good indicator of, that's why I like looking at the smaller wave counts, 5 in 1 minute especially, to get the change in trend, to get the 5 waves in one direction. We've got a 1, 2, 3, 4, 5 here. Or it could be, and since 5 looks big, it could be 1, 2, and then 3 is subdividing 1, 2, 3, 4, 5. Which, let's just put it there because it looks much cleaner that way, with the 3rd wave extending even though 5th waves can. You can see that subdivided there, and then we've got that. So that's what we're looking at there. We're looking at a move to 41.49 on a very short term, or 41.40. Okay, make or break 41.70 low. By the way, 40, this is not here, but we're short on all indexes against the all-time high. In the S&P, it's 42.38. Okay, but that's what we're looking at there. I want to show you guys how this thing is moving in perfect Fibonacci relationships. There's that chart that we put out less than an hour into trading on Friday, a report showing that that second wave zigzag. Okay, so let's get into this 5 minutes here, and you can see from the all-time high, we've got 1 down on 512. Look at our sequence here. There's the all-time high. There's a Fibonacci 5 days later, direct hit on the Fibonacci turn date. Then we got up on 514, Fibonacci 8 days later. By the way, the 14th was on a Saturday, so it closed as close as it could. I'm sorry, the 15th was a Saturday, so it closed as close as it could on the 14th. The closest trading day to Saturday was Friday. So it did exactly as it could. It can't close on Saturday. And then we have the next in the sequence is 13 days, and that gives us the 521 high, off by 30 minutes because it was right here on the 20th, and that's 30 minutes of the open there. Okay, next turn date in the sequence is May 28th. Will that mark wave 3 down? We shall see. Okay, but here's our targets. I gave them earlier, but these are more exact. I got 4007. If this 3rd wave here in parentheses gains equality with 1, and the 1618 multiple, Fibonacci multiple, is 38.95. So that's what we're looking at in the S&P, and this is the short-term make or break for this internal count, and then this is the next area of resistance at, second wave high up here right around 41.88. Okay, let's get into the NASDAQ because that's even more interesting than the S&P. The NASDAQ made a new all-time high on April 29th, a direct hit on our Fibonacci time spiral. We'll get into that, but this is where, see if I can get this all in there. I had a completed 5 waves to the upside. There we go. Let's make that a little plainer for everyone to see. And that was a 1 day later. The S&P started from the March 4 low. This starts from the March 5th low. And let's get a retracement here and see what we're doing as far as a retracement of that most recent 5 wave advance. And you can see right there, it's sitting on the 618 at that low, which I believe was on the 13th, 12th or 13th, whatever. I think it was the 12th, yeah. You can see here we've got a 1 down, a 2 up, and it looks like a series of 1s and 2. 1, 2, and then 1, 2, and then we're looking at 3 of 3. So we'll see how that plays out. Here is the May 7th high in the S&P. It's a wave 2 high in the NASDAQ. There's our divergence between the indexes. As you can see, that makes it a little bit better. So we're seeing how that is going to turn. But I'm going to show you guys the pick I have on the NASDAQ. We got a little detail here. Here's from that 3.5 low, and you can see it turned on Fibonacci turn dates on the way up and on the way down from the direct hit on the April 29th high. You can see 318 was a Fibonacci 13 days. It missed by 2. 326 was the next date in the sequence, and the low came in 1 day earlier. The next was the 4-8 turn date. And again, this was 4-6, 4-7, 2 days of sideways. You can say it missed the high by 1 day or the low by 1 day. It was right in the middle. It's immaterial. It caught this turn either here or here off by a day. And the next one was 429, and bang, there's 429, the spike higher, a direct hit. So that sequence played out to perfection from the March 5th low to the 429 high. If it's going to continue, it marks June 2nd for the next date. And you can see, now let's look on the way down from the high. Here's that 429 high. That's the beginning of the sequence. The first date in the sequence is 5 days later. 5-4, bang, direct hit, slippage, none. Next one in the sequence is 5-7, marks a high. Next date in the sequence, bang, direct hit, no slippage. Next date in the sequence is 5-12. That marks, here's that 1-2, 1-2, where the third wave is extending. That marks 1 of 3 low there. Next date in the sequence, 5-20. It misses it by a day. That was 5-20, and 5-21, as you guys know, was Friday. So far, out of all these dates, 1, 2, 3, 4, 5 in the sequence, we have a total slippage of 1 whole day. And we have 3 direct hits. The next date in the sequence here is June 2nd, just like it is here, June 2nd. Okay, here's our Fibonacci multiples for this third wave. A 1.618 multiple gives us 12,600, while a 2.618 gives us 11,842. Why do I put that 2.618 up there? Because third of third waves are the most powerful. They can take on any Fibonacci multiple they choose. If it is a third of third wave of at least 2 or 3 degrees, it typically goes 2.618, can go 3, can go 4. We'll have to watch it play out. But this is looking like a series of 1s and 2s. And until that high on 5-7 is taken out, it is a series of 1s and 2s. You can see these retracements are pretty high. Let me look at that really quick here. Like this let me get rid of this so it doesn't confuse everyone. Remove that, and we can leave that there because the retracements will be in red. This retracement from that high is right on the 50%. That's not too bad. And let me get this wave 2 of 3. Okay, let's get it back here. That's the extension you just moved. Okay, remove. Let's move this down here and get this retracement of that internal wave. There we go. That's what we wanted to see. And you can see this one down, 2 up, retrace between 618 and 786. That's typically what they're doing. Get the shorts out, stop them out, and then take it down, take the rug out from under the longs, and take the shorts, stop them out, and then most of the people lose most of their money most of the time, and the dealers and the brokers are the only ones making money. That's the game plan, okay? So you know what they're doing when they take this up. It's not the first time, won't be the last, okay? So let me see if I got anything else on that NASDAQ. That is it here, okay. That's what we're looking at, June 2nd, which is how many days away? That's about a week and a half, and we have a holiday coming up next Monday. So we'll see. We'll watch that play out. We'll see how that goes. Watch that that wave 2 high of 13,829. See if they want to take this any higher or not. Let's look at Tesla. Looking at Tesla on a 1-hour chart, and there's that January 900 high and the March 5th. Again, it's the same turn date. That was I think it was 539 if I'm not mistaken. Okay, but then we have an ABC up, and this is where it gets a little bit complicated, but it's really unraveling. And it looks like this C wave down is coming to fruition from the April 14th high. You can see we got a 1 down, which was a leading diagonal where 4 overlapped 1, a 2 up. We could have put 3 here or here, 3 if it equaled 1, 3 if it made an extension of 1.618, 4, and this is where it gets a little bit tricky. Let me get in that on, this is an hourly chart. I think I have this from the 414 high on a closer look here. Yeah, there we go. Let's see if we can get in here. Okay, there is the 5 waves down leading diagonal. There's 2, there's 3. Here's what I wanted to focus on. 4 will gain equality with 1 at 537. And this looks like 1, 2, 3. And then 4 is violating the price territory of 1. I don't know if we can. Let's get in this a lot closer. Okay, here we go. Let's look at it from 4 of 5 before we get to 5 of 5 right here. Okay, yeah, see this here. This would be 1 down here, and this would be 2, and there's 3, and then 4 went up above 1 twice. So I had that ending diagonal with a question mark there. Is it going to end with a diagonal like it started? And this would just be 1 of 5, by the way. We got a long way to go down there to our target of where C equals A at 415. We're not there yet, or Tesla's not there yet. But this is a little dicey here. Did it put in a 1, 2, 3, 4, 5? Let me label that for you guys. Or is it going to go further and we have some overlap in there? Let me get out that wave count here. Okay, we've got a 1 down, 2 up, a 3 down, and 4 and 5. We could count that as the end of it with an ending diagonal triangle where 4 overlaps 5, and here we're going to retrace all this. That's a possibility, but let me take that out of there. There we go, so we don't have too many distractions. Hit the OK. Or are we going to retrace all of this, and that 5 is complete down here. I would have liked to have seen it get to at least here, but it came close where that 5 is equal to that 1. Let's move it here for now. For argument's sake, let's do a retracement, okay? Let's see here. From that April 14 high, if this retracement is beginning from this low, where is it going? So you guys know where to look for the next wave down. Okay, that's down there, and you can see here is a 382 at 635, a 50% at 663, and a 618% at 691. Typically they go to the previous 4th wave. Keep in mind we could have counted, I'll move it here so you guys can see. This can count either way. You could count 3 and 4 here, and then you look for a retracement up there. I still wanted to see this go down. I don't like that overlap there. Could be a series of 1s and 2s. That's a little complicated here, but this was in here and it worked itself out. It just took some time. We'll see where that goes. Okay, we'll keep watching Tesla tick by tick as we always do, but the end game is 415. Or if it's a 1, 2, 3 instead of an ABC, we're looking at 188, and this would be 1, this would be 2, and this would be 3 down here at 188. Okay, let's look at gold, and we're going to look at it from a different perspective. We've been looking at gold from the March 20 lows like everything else, but gold counts longer term with all the way back to December of 2015, a 1 up, a 2 down, a 3 up, a 4 down. And as you guys may recall, ever since this started coming down, we said it didn't look impulsive. We think this is corrective. All right, we're looking for an ABC where C gains equality with A at 16. I think it was 44, 47, somewhere around there. And then 14, 40, I think it was 6 for a 1.618. And we'd like to see it go again in the area of the previous fourth wave of one larger degree of trend. But it's really turned up since then, and it looks like it may have just come short. Okay, we got to reevaluate this. So I want to look at this a little more detailed from that low. And let me get a smaller degree of trend here. Let's see, we're looking at March and April. So let's get an hourly here of gold. Here we go. Let's get that rolling. And that's the March low there. Let me get these retracement levels out of the way so we can have a clean slate, if you will. Let's make that bigger. And we're going to count this live. I haven't counted. Well, you can see that 1, 2, 3, 4, 5, 6. 1, 2, 1, 2, 3. It could be 1, 2, and 3. It could have been over here, and it looks like it's due for a correction. But let's look at this here. Okay, we definitely have 1 up here. Let's get 2 down here. And 3, yeah, there, and then 4 and 5. Let's count this for you guys. Okay, let's get this in. We've got a low there. We've got a 1. We've got a 2. 1, 2, 3, 4, 5. 3 up here. 4 down here. 1, 2, 3, 4, 5, 6. Boy, it could make 1 more high, but it may not. Depends on if that wave extends. But it looks like it's got 5 completed. So for we'll stay long for now, thinking that even as it is going up, it's going to just retrace a percentage of that. And let's get a percentage of that. See where we're at. Retracement. Here we go. And that's what we're looking at. Again, 382. I mean, again, between the third and fourth wave, that would be ideal at 1809. We got a 784 and a, 1784 and 1759. So, yeah, we got to reassess gold here. Looks like it may have just fallen short of our ideal Fibonacci target, and the bullish trend just took over. I'd like to see it go there. I like the Fibonacci perfection, but it didn't really get there yet. But that would have been perfect. It still may, but that's asking for a lot at this point. Okay, let's move on to Amazon. We haven't covered Amazon in a long time, if ever. Again, we're going to start from the March lows. You can see a 1 up here, a 2 down here, a 3 up here. If you want a definition of 4, just look at this, long sideways. That's a definite 4, no doubt about it. Now, we can count 5 as complete up here at the, the April 30th high at 35.54. You can see 5 waves here. Let me put that in. Let me get that wave counter, if you will. Okay, from that fourth wave low, we've got a 1 up, a 2 down. I may have mismarked that one. A 3 up, a 4 down, and a 5 up. Okay, so what does that retrace? Let's see what we have here. We're doing this cold. I haven't even looked at it until now. And there is right on a 618. Okay, so if it's going to extend and go higher, it would do it from here. But obviously, make or break would be that all-time high at 35.54. But it looks like it's complete, because this fifth wave satisfied 2 minimum requirements. 1, it's higher than 3, and 2, it has 5 waves. Okay, so what we want to do is, what is the retracement of the entire 5 waves up from the March 2020 low and we get 28.19, 25.92, and 23.64. Okay, we got a breakthrough this low here. Actually, this one would be good on the 2, and then that one would go out, be taken out, and then we'd be on our way for that correction. Let's see if this is complete over here. Let's get an extension of that. If this is an A or a 1 down, and that's a B or a 2 up, there we go. We're looking at right above the 382. That's at 28.66, and that's right on the 50% retracement, just at near 2600 even. That would be ideal. That would be an A, B, C, or a 1, 2, 3, or C or 3 is equal to 1.618 of A or 1. Okay, want to review the S&P here real quick. This is what we are looking at. Okay, turning on the Fibonacci turn dates. The next one in the sequence is May 28th. There's our targets. And the real exciting one now, and I led with the NASDAQ in our morning report to our monthly subscribers today, is this thing is turning on perfection with virtually no slippage on the way up and no slippage on the way down. The next turn date in this sequence is June 2nd, which is a week and a half and away. We got that Monday Memorial Day holiday. That'll do it for this weekly update, and until next time, take care, everyone.